I'm going to present the Trade Desk. They operate a cloud-based software platform that lets ad buyers bid for ads, optimizing their spending, getting the right ads in front of the right eyes at the right time. This is about making ad spend more effective, adding value in how it brings as much insight as possible to what the marketer is spending and the activity that the ads are driving. The Trade Desk is the leader in its space. It's the top demand side ad platform and really the industry standard bearer. The platform evaluates 12 million ad impressions per second to help ad buyers reach the right consumers. So here we have Jeff Green, founded the Trade Desk in 2009. He's the CEO and president. And prior to founding the Trade Desk, he had founded an ad exchange that was bought by Microsoft. This is really the smartest guy in the room when it comes to the ad tech space. He has a very sophisticated understanding of the industry and brings, a marvelous background and intellect to the Trade Desk. He's also just 44 years old, and we love to see the skin in the game. He owns 10% of the company, and dual share structure lets him have the majority vote. So I don't usually use slides, but when the visual representation can, make a big impact, I like to. So on the left, we have Trade Desk's revenue growth since 2014, and on the right, gross spend on the platform. How do they make money? Well, they charge the clients a percentage of their gross spend on the platform. So these metrics are going to move more or less in tandem. And we'll get to recent earnings in a second, but already for the first 9 months of 2021, they've put up 55% revenue growth, 800 million in revenue so far for the year. We see at the bottom here, they did 335 million in adjusted net income in 2020. They've been profitable since 2013. We're looking at sequential quarters of revenue growth here. This is through Q2 21, but they did just report Q3 earnings this week. Revenue is up 39%, margins up across the board, adjusted net income up 43%, beat on revenue and earnings per share. Gross margins tend to be around 80%, operating margins around 20%. Another thing that I really love is customer retention remains above 95% for the past 7 years, quarter over quarter. International growth in the most recent quarter was faster than domestic. It's a great sign because the international opportunity is a giant one. The ad industry is, $750 billion industry and growing, going to reach 1 trillion eventually. And if you believe that the people are reading less paper magazines, the future of media is digital, marketers are going to continue moving ad spend online, then this is a huge market opportunity.
I think the Trade Desk is a great company, obviously. I think that's no doubt. But what are your thoughts on valuation, especially after the earnings pop? Because doing some quick numbers, I think the Trade Desk is currently 40 times sales, getting enterprise value. And for example, other players in the ad industry, like the one I'm pitching today, Digital Turbine, is at 30 times gross profit. I did gross profit because obviously margins are very different.
Yeah, well, I would just say that they are at, 31 times around forward estimates for the Trade Desk. I mean, we are getting excellent margins and the industry leader here. And, I would say, thinking about the long term, the trend toward $1 trillion ad, global ad market and, the move of programmatic advertising or the move toward programmatic advertising is something that's going to play out over 5 to 10 years.
More on the, let's say, what their room to grow is, because they need to grow the inventory. And I'm a bit worried because they don't control the whole ecosystem. If they get boxed out by Google, Apple, their policies, etc. So how are they? What's the TAM for Trade Desk at this price where they're at?
I think that Google and Facebook are actually boxing themselves out. The Trade Desk is about, an open internet and partnering with advertisers and marketers. What's the TAM? Well, the Trade Desk has less than 1% of current global ad spend flowing through its platform right now. And this is, the biggest player and the most innovative. So I would say they still have 99% of the market if you believe that all ad spend will eventually go digital.
Okay. Yeah, my point was maybe that Facebook won't allow ads from Trade Desk to run on their platform, let's say, and that limits the potential. But I get what you're saying from a, let's say, independent provider. Sure.
Basically, I'm just looking at the like the statistics of the trade desk, and I know others touched on this, but does it worry you that their PE is at 170, their price of sales is at 40, and like their market cap is nearly 50x their 2020 revenue? Can they continue to support this? And what happens if they fail on an earnings? Does the world come crashing down?
Well, I think we have seen them, not necessarily fail on earnings, but give disappointing earnings, like in the beginning of 2020, a lot of advertisers sort of tightened the purse strings and we saw less advertising. Yeah, the stock falls, 40%, but the stock went up 50% this week, on the great earnings that they just put up. So I think what would actually, if you want to talk about risks and what would concern me, we don't have any data on what happens to the trade desk in a recession, a prolonged or a deep recession. And so, we could imagine that, advertisers might pull back on spending and, that would limit trade desk revenue. But I really don't have any concerns that they won't be able to continue to grow revenue apace. I mean, the market opportunity is really, really big. And, a lot of people coming online in, India and the like, and, in a mobile first environment. Yeah.
Okay, so let's take a look at the trade desk's technicals. So if we look at the chart, we can see that there's a large symmetrical triangle with an upside breakout on earnings. It's hit an all-time high and closed very close yesterday, so it's a very good momentum trade. All-time high means fresh territory though, so it's quite hard to do technical analysis on that, but the momentum does look good. Now, we normally talk about moving averages here, but the price action has been so powerful that they're irrelevant in the near term, but they are managing to stay outside the Bollinger Bands, which is rare, and they do ultimately revert to the mean. Or from the other perspective, if the price action remains so strong, the mean will revert to the price. So if you use Tesla as an example, now, we would normally talk about the MACD and the RSI here, but in trending markets, as we've already explained, they're particularly useless. There's no clear chart pattern, so we need to interpret the candlesticks individually, which are clearly very bullish. Friday's candlestick was called a Marubozu, which has barely no drawdown during the day and closing virtually at the top. Big price movement with stronger volume than the previous 2 days. 2 bullish candlesticks before the profit taking with a bullish volume also. So in summary, it's a good momentum play, but keep stop losses tight. If the market looks too good to be true, which it does with TTD, exercise some caution. There's no technical reason to keep it up, so it's difficult to see the next 90 days. So if you're going to enter a position, believe in the fundamentals or wait for a retracement.